Evening, everybody. I hope you can hear me. We're just waiting to get everybody admitted into this evening's call. So give me a moment and we will get started right away here, just to be respectful of all of your guys' time this evening. All right, great. So hopefully we'll have some more trickle in here as the night goes on or as we get started, but we will get going. So hopefully everybody can hear me okay. If you can't, please just write in the chat box and I'll adjust my volume on my end. So good evening, everybody, and welcome to our second annual Agricultural Excellence webinar. On behalf of myself and our partners, Lacombe and Red Deer County, we would like to thank you for joining us this evening. Before we begin, I want to quickly introduce myself as your host for this evening. My name is Samantha Jones, and I'm a wealth advisor with the McDougall Wealth Management team in Red Deer. Located in the heart of Alberta, we have extensive knowledge in the agriculture industry and are very proud to be serving the ag community. As a family wealth office, we work with family farm businesses as they navigate transition, protection, and wealth while still maintaining viable farming operations and ensuring the family unit stays together at the end of the day. So our goal for this evening is to provide you with valuable and practical takeaways, regardless of where you're at in your transition planning. A few housekeeping items before we get started. So over the course of the next 2 hours, we'll be joined by 3 industry experts. If you have questions, there is a Q&A box at the bottom of your screen. Please put your questions in there and we will answer those throughout the evening. If we don't get to your question, we will try and get back to you individually, or if you do have a question specific to your family scenario, please feel free to email us after and we can put whatever expert we need in front of that question to have that answered, okay? And finally, this presentation is being recorded, so you will all be receiving a copy of that tomorrow to have at your convenience as well if you can't stick around for the entire event here tonight. So without further ado and kind of getting right into things, I would like to introduce our first speaker, and apologies, I'm just going to read the bios right off the paper here. So our first speaker of the night is Patrick Leman. Patrick is Vice President, Agriculture and Agri-Food at National Bank of Canada, where he oversees the groups of operations and acts as market strategy leader. With a background in agriculture, Patrick always has a keen interest in agriculture, agri-food, and economics. He is often called to comment on industry news and address economic trends and their impact at various conferences. He is supported by National Bank Financial Economics and Strategy Group, which has been frequently recognized by Bloomberg Markets for its expertise. The group regularly ranks among Canada's top forecasters and is known for accurate projections about exchange rates and the US economy. Patrick has his bachelor's degree in agricultural economics from the University of Laval and a master's in business administration from the University of Sherbrooke. So I'm going to turn that over to you here, Patrick, and Vincent will kind of pick up the back end of that presentation. Okay, so
yes, thank you, Samantha. So hopefully you can hear me well. Very pleased to be with you for that this webinar, and with my colleague Vincent Cloutier, which is Chief Advisor, Agriculture and Agri-Food. So thank you, Vincent, to be with me to share some thoughts on the economic and agriculture outlook. So I'll be trying to share my screen here. Hopefully will work.
Works fine, Pat.
Yep, I see your screen.
Fine, okay.
So you're good. Yep.
Well, perfect. So good evening again. So very pleased to be with you. So what we're going to do over the next 30 minutes, we're going to look into some economic and ag perspective and outlook, what we see for next year, major trends. So I will be focusing on the first 15 minutes on the economic outlook itself, and Vincent will jump in and the next 15 minutes, to deep dive a bit on agriculture and the major trend we see. Obviously, most of you are managing businesses, so the objective here is to share some point of view we got on the economic perspective, and hopefully it will provide you some interesting information and help you in your day-to-day decision. A couple words before starting about the beef industry. So some of you are in that industry, so we know that last December we got a case. BSC case, and both China and Philippines did a suspension of their importation of beef. So obviously it's some headwind for the industry, but the way we see that, given that the cow itself, didn't go into the food chain, and it was a typical case, we're pretty confident that it's not going to hold for a while. But anyways, we just want to acknowledge that, and we know that it's some headwinds, and we're here to support if there's some needs. Talking about some headwinds, let's talk a bit about that pandemic. How things are moving up. Just try to switch. So obviously it's a bit of unprecedented thing that we're in face of. The last sanitary crisis, that did impact a lot the economy, the world economy. It was a Spanish flu 100 years ago. So just to say that there's no book, for our politician to manage the country in that crisis, for sure, and there's no book as well for economists. But I guess in that situation, the two biggest questions we can have is first, that if that fifth wave is going to jeopardize, the strong economic growth that we were forecasting, for this year, 2022 and 2023, and is that fifth wave will change the picture on what we were foreseeing with respect to rate increase from the Bank of Canada, which is impacting a lot, business farms, where there's obviously a lot of assets involved and a lot of debt. So I'll start my presentation with the conclusion. So no, so we don't foresee major changes with respect to the GDP, the economic growth, and we strongly believe that there's going to be some rate increases in 2022 and 2023. I'll get into that. So, but we'll focus on the element that they are supporting that, and I'll try to explain that, and I'll be happy to take some question during the question period. So let's start quickly with the quick snapshot on the evolution of the pandemic. So you have all seen the big spike all across the world with respect to number of cases at that point, to such extent that most of the countries are not following anymore number of cases. There's too many to follow as per capacity. The focus is now more on hospitalization, people they are hospitalized, including the extensive care. So you can see here is a graph, in the four provinces, in Canada. So we can see, for Quebec and Ontario, the dark blue line and the red line. So we got a very high active fifth wave. You guys got a hell of a ride, for the fourth wave, but it does impacting a lot. So we saw in numerous countries, reinforcing social distancing measures, and some industries such as restoration and air travel, seeing their level of activities moving down. But when we look into the manufacturing sector, in exception of the first wave, where we can see here in the gray zone, a deep dive, since that first wave, it's pretty strong all across the world, a big expansion in manufacturing. So this is a strong contributor to the world economic growth. So, and even with that first wave, we still see some dynamic growth. So this is one factor that is supporting why we see a strong growth, even with the fifth wave, in 2022. Another element to take in consideration is the fiscal and the monetary policy, which is very, very important. Actually, we haven't seen that since the last World War. So it's quite intense with respect to the money that the governments are putting into their economy to support their businesses and their consumers. It's an average of 8%, in the advanced economy. If you look at the right end of the graph, with the Canada, we're in the third place. So we're one of the country which has invested the most in the program to support businesses and to support the consumer, the household as well. And there's no counter indication that government will not be there if there's a need in the next 2 years or so. So this is one factor as well, one element as well that's sustaining a strong economic growth. When we're looking into the retail sales, so it's about the same picture than the manufacturing. So since that first wave, the growth has been very strong. Look at the red line, it's the trend. So we're way above this trend, and so customers are still expensing some money, but they move some expenses from travel, for example, to some of the retail. So this retail, it's an important aspect of the economy, so it's supporting as well some growth. Another look on the price of the commodities, so energy, metals, forestry, and even agricultural products, and Vincent will talk about some of them in his part, but we know as a fact that when the commodities, the prices are moving up, this is bringing a lot of traction to the Canadian economy. So since the beginning of the pandemic, there's strong increase of prices, and they're still quite robust. So this is supporting the economy a lot as well. If we look on the employment perspective as well, so here what we got in the graph on the red dotted line, it's the level of employment. So it took only 19 months to be back to the pre-pandemic peak, and if we make comparison with the three former recession or downturn, 2008, the 90, and the 81, took a while, since until we get back to that level. So again, a strong level of employment, is supporting as well the economy. Drawing your attention on the solid blue dotted line, so it's the United States, so they're still lagging a bit, so they're below 2% with respect to their pre-pandemic peak. So they're close to be back, but there's still some gap out there. Another element that, sorry, I went a quick bit. So another element, is that there's an unprecedented positive wealth effect on the household. So the household assets, move up a lot during that crisis, both Canada and the United States. We can argue that, the housing market's been incredible, so it's been pushing up the value of the household, but it's not just that. So if you look on the left end of the graph of that chart here, if we make comparison with the beginning of the crisis, the Canadian household, got close to 300 billion more in savings, so deposit, current account, and equity and funds. So which is major. Think about that. So it's roughly 3 months of GDP, the Canadian GDP. So the customers got a lot of money in their pocket, thanks to that economy that went well, and the numerous support program, and the beginning of the crisis, there's some expenses that have been pushed a bit forward. So customers are in good shape. Government is supporting a lot of the economy. Manufacturing, retail sectors are doing well. So all these elements, are going to support that strong economic growth. So we did adjust our forecast for next year for the Canadian GDP from 4.3, 4.4 to 3.8. So we're remaining in a range of 4% of growth for next year, which is quite strong. Quick look on the disposable income. So it's always interesting to look because there's still a lot of program, in action from federal government and provincial government. But the dark blue line is the disposable income. When the governmental measure are excluded. So and you can see, so we're way above the trend as well. So another element is supporting the scenario we got. Taking me to talk a bit about the inflation, which is the major thing we're looking at when it's time to look on the interest rates and what the Bank of Canada is going to do, what the Fed's going to do. We read a lot of things in the last few months about, well, is the inflation transitory? It's just a matter of a few months, but start to stick around. So let's look a bit on that. So on a world standpoint, the global inflation is around 4.6, so which is it's quite high. We have to get back to 2008 to see that kind of level of inflation. So it's quite across the board. Another element which is pushing on this inflation and keeping that inflation for a while, it's the level of inventory. So here in the graph, inventories in the States are down by 5%, and we just start to see the beginning of the rebuild of these inventory. Going to take roughly 2 years or maybe a bit more to rebuild that. So it's going to bring a lot of demand as well, but it's going to put some pressure on inflation as well. Everything is out of stock. I was reading this morning that even the national hockey players, they are running out of hockey sticks. So it's all across the board. So it's putting pressure on inflation, and it's going to stick around for a few months, if not years. There's another aspect. There's an unusual dynamic in the States that we are not seeing in Canada. So there's a big increase in revenue in Canada, but the graph here, the chart here in red, it's the increase of the salaries and the wages, and on the bottom is the gap, in the employment. So recall a couple slides ago, I was talking about that still 2% gap, in the States. So usually it's moving in the same direction. So when there's unemployment, salaries are moving down, but it's a bit unusual. So it's putting pressure as well on inflation, because what does really mean, even if there's still not full employment, there's a lot of pressure. So businesses has to increase their salary to retain their employees and attract new employees. So this is bringing some inflation as well. I'm just going to turn to the next slide. So we see what we got in our model. So for 2022, it's between 4 and 5 rate increases from the Bank of Canada for 2022, and between 3 and 4 for 2023. The question is not, is the Bank of Canada is going to increase its rate, is going to be, the question is at what pace and when. So the fifth rate will dictate a bit, but all fundamental out there. The chart here is the future market on the banking acceptance, the BAs. So interesting to compare, what the market is expecting. And if you see from now to March 2023, market is expecting around 6 increases of a quarter basis point, so which is 1.5. So it's quite similar to the economic scenario we got. Couple comments on the US dollar. I know that you are interested by that. There's a close link with the commodities. So we see the Canadian / US dollar, Canadian dollar at 1.20 for the next 12 months. So a slight increase, no big movement. What we got in that chart here, the red line, it's our model, which is including the price of commodity and the yield in both Canada and the USA. So what our model is suggesting is that the Canadian dollar is a little bit undervalued at the moment. It's not a big surprise because in financial crisis or pandemic crisis, US dollar all across the world is having a great demand for that. We did observe that over the last downturn as well. So in a nutshell, it's about it. So we foresee interesting economic growth for Canada, for states, and all across the world. I was saying close to 4%. So we see Canadian dollar around 120. We see between 4 and 5 rate increases. So it's time as business owner to, if it's not already done, time to manage the risk, with respect to rate increase, trying to sit down and talk about what are the best strategies. A couple of risk factors that we're going to look at that might influence a bit so it's how the central banks all across the world are going to react to that inflation. Already started in some country. There are some countries that already started to raise their rate. The deleveraging of the balance sheet. In Canada, we stopped to buy some bonds 3 months ago. The States are still supporting the market a bit, following as well ESG transition and the emerging market, which represents 60% of the worldwide economy, how they are going to behave in that fifth wave and in 2022. So that's about it. I'll be pleased to take some questions during the question period, and I'll turn it to you, Vincent, to some deep dive in some trend in agriculture.
Yeah, thank you, Patrick. Can you hear me well?
Yep.
Excellent, thank you. So as Pat mentioned earlier, I've been with the bank with 2 years, and my job is to support the in the agri-food division with macroeconomic analysis. So I've been working with the beef sector, with the hog industry as well in the past, and I've worked as well with La Coop Fédérée, which is now called Soliu Groupe Coopératif. So if I had to choose one word to describe what's going on in the ag and agri-food markets these days, I would choose the word effervescence. So one can take a look at it here on the FAO Food Price Index, which is built upon 5 different commodities, so vegetable oils, cereals, meat, dairy, and sugar. And one could see that in 2021, we were in a totally different area than the previous years, and obviously the year of 2022 is off to a very good start as well. So this would be mostly due to the next slide, please, Pat. This would be mostly due to the weather woes in South America last year, and the energy prices as well. And there's obviously some bottleneck issues at the ports that are somewhat related to COVID. I believe, Pat, if you click a couple times, yes, there's some.
Okay, all right.
Yeah. And I don't think that we talk enough about the impact of ASF on the ag and agri-food markets. I mean, it has a very important impact on the hog industry for sure, on the beef industry as well, because the meat protein demand, the meat demand in China has been very high for a couple of years, but it's having a very important impact as well on the grain prices, because we are talking here about hundreds of millions of hogs that used to be fed with table scraps and will nowadays be fed with corn and beans. So it's having a very important impact on grain prices. So you can see on this next graph here that the next slide, please, Patrick, that the prices are extremely high. They have been high for a certain number of months now, and depending of what kind of crop we will have in the rest of the world in the coming months, especially in South America, it will dictate the reality of the market for 2022. But still, the future markets are quite promising. But I want to spend some time, and I have a couple of slides on the hot topic, fertilizers. So they've been quite expensive for about 6 to 8 months now, and they will remain quite expensive for a foreseeable future. And we are witnessing a booming market. So we have a market here. Next slide, please, Patrick. We have a market that is troubled by logistic issues. I think everything has been said about the energy prices, about the weather woes, the Hurricane Ida, for example, but geopolitics is having a great impact on this market now. So therefore, we are going through an unprecedented time in terms of cost of fertilizer, but at least the grain prices remain very good as well. Next slide, please. So these inputs are essential. We can't work without them. We can't grow crops without them. They are non-renewable in the case of phosphorus and potash, or they are produced from non-renewable resources. In the case of nitrogen, it takes a lot of natural gas, and they are deeply linked to a very emotional market, agriculture and agri-food. So all the ingredients are there to create a market that is very sensitive to geopolitical issues. And what are 3 of the main fertilizer exporters in the world? Well, China, Russia, United States. China, Russia, United States. These are not countries that used to be soft in their diplomatic relationships, are they? And the coming months and years could be even more challenging in that matter. So, for example, it's very difficult to foresee what will, next slide, please, Patrick. It's hard to foresee what will happen in the US. A couple more clicks, please. In the US in the coming years, but in the middle of February, he will launch his whole social media platform. It's going to be called Truth Social. One cannot invent it. So, there's a couple of steps that will likely happen. So he will try to be the Republican nominee again. He will likely win this position quite easily, and following the next presidential election in November 2024, he's going to claim that he won it, whatever happens. So what will happen after that? What will be the relation with China, with Russia? You tell me. We are all looking forward to see how it will go. I'm going to skip this next slide, Patrick, going to slide number 30, please. So in this whole market, we need to wonder which factors would be considered cyclical and which are structural. So cyclical transportation bottlenecks, they will not last forever. Maybe 1 more year, maybe 2 because of Omicron, because of the next variant, if there's one. Well, but it won't last forever. Neither will exceptional grain prices. But 1 more click, please. There's some factors that may last a little longer. Energy prices. I think we did reach a new plateau. These labor issues are with us for some times. And sorry for the typo here, but these geopolitical political issues are in the environment for quite some time ahead. So what financial impact can we expect on farms in 2022? Next slide, please. So there's a couple assumptions we need to make to try and measure that. And I'm going to suggest to you that in 2022, fertilizer costs will be twice, or fertilizer will be twice as expensive in 2022 than they've been between 2015 and 2020. And grain prices in 2022 would be equivalent, in my scenario, to the average of what they've been in 2020 and 2021. So in 2020, the prices were low. In 2021, they've been exceptional. So overall, if you do this average, they would be 30% higher in 2022 than what they've been in between 2015 and 2020. I believe this is a rather conservative assumption. And in terms of fertilizer cost being twice as expensive as they've been in the last 5 years, I believe it's close to the reality. So what does it? Where does it lead us? Next slide, please. So I tried to put some numbers together based on the numbers published by StatsCan. So for an average farm in Canada, which doesn't exist, we will all agree on that. So between 2015 and 2020, the revenues would have been around $500,000 for a net operating income of $107,000. So second column here, if I increase the expected revenue following the price scenario that I just talked about, and if I do increase the cost of fertilizer following the same scenario, I would come up with a net income which would be 63% higher than the average of the years 2015 and 2020. You're going to say, Vincent, there's not only the fertilizer cost that will go up, cost of fuel is up, cost of pesticides is up. That's right. So the question would be, with those numbers here, can this net income increase cover the increased cost of the other inputs? I believe so, and this is why we believe that if the yields are good, much better than what they've been last summer, well, we can expect a year of positive margins in 2022. When talking about fertilizers, I always like to talk about those ESG issues. A couple of clicks here. The last bubble pad is about ESG. So these environment, social, and governance issues. There's lots of expectations from all the businesses, from all the industries. We need to be efficient, yes, but we always need to work better to show that we take care of all the resources, etc. And there's been a couple articles lately about fertilizer uses, and I'm the first one to believe that we can always do better, but I think it's important to realize that we are already doing a terrific job. And I put together a couple of stats that I pulled from the OECD database. So that would be the nitrogen balance of a couple dozens of countries. So you can see at the top of the list here, South Korea, Japan, some European countries. So they have quite a troubling unbalance. But as you can see, Canada is in a rather good position, and it's the same with the phosphorus balance that you can see on this slide here. So I'm sorry, it's all in French here, but you will understand the message, I guess. So the the whole message here would be, we can always do better, we need to do better, but we are already doing a heck of a job, especially when compared with other countries around the world. Pat, I'm going to skip this next slide about dairy. We can come back on the Q&A if necessary. And I'm going to conclude with a certain number of impact factors in agriculture and agri-food that we need to take a look at in the coming weeks and months. So in grain sector, let's take a look at what will happen in South America. It's apparently very wet in some areas, very dry in others. So we will have a clearer idea in the coming months of the quality of the crop that will come up. And in the dairy sector, the big news next year will be the net impact of the price increase that was announced by the Canadian Dairy Commission in October 2021. We will have this answer by mid-March 2022. In the hog sector, the real issue is foreign labor availability. So lots of packing plants in Canada lack labor, and there's not enough labor in the country to meet the needs of this industry. So we need to hire people from other countries. It's long, it's tough, it's a big burden. So we will see if the industry can meet the labor needs in the coming months. And all of us, I think, need to keep an eye on the situation of ASF in China. From the noise that we hear, there's still quite a number of problems there related to this virus. And I wouldn't be surprised to see the hog prices go up by mid-year, by mid-2022, especially due to high Chinese imports. So yeah, it's about it, Pat, for a couple of ag and agri-food issues. And if we still have some time to discuss, it will be a pleasure.
Well, thank you, Vincent. So as you can see, we are cautiously optimistic, about both economy and agriculture economy. So for us, agriculture is still an industry where we foresee a lot of development and a lot of stability over the next years, and we're pleased to support agriculture businesses. So turn it back to you, Samantha. So I don't know if we got some questions.
We got a pretty quiet crowd here tonight. I'll just ask this one here, and then we will move on to our next presenter. Looking into 2022, 2023, your view, what is the biggest economic risk or tailwind we have coming up?
Well, obviously, it's related to that pandemic. It would be a new variant where would be a bit more, way more, intense, one number of deaths and etc., which that would have a deep impact on the economy. So I think this is the largest thing, and all the related elements with that. So the supply chains is very fragile. So been all the industries have been very quick to adapt during these waves, but a variant which have more death will scare more people, etc., keeping people in a bit more from home. This is a scenario where it would put a lot of pressure, all across the world, not just in the Canadian economy. That being said, even if I showed you a chart about the Canada as one of the countries which has invested the most, which is programmed to support, businesses and customers as well, and workers as well, we're still in the best shape, with respect to debt 2 GDP level. We're still leading the pack, having the lowest debt. So we got a good capacity, among all the advanced economy. We're the country, despite everything we can, we were not comfortable with sometimes with our politicians, but we're still in one of the best shape all across the world in the advanced economy with respect to level of debt. So it means that we still have room for maneuver if there's one of these drastic events is happening. But I would say that would be the biggest thing we're looking at the moment on economic standpoint.
Great, thank you, Patrick, and thank you, Vincent. You guys are on the other side of Canada here, so thank you for joining us so late in your guys' evening. We really appreciate it.